What is going on YouTube? It's Sanku. I'm back with another one. Now in this drop, coming at you guys with a couple of plays and I bring to attention before I kick things off. I'd like to help out the channel by hitting that like button because it keeps the show rolling. Alright guys, so we're moments away from kickoff in these markets and I want to use this one as an opportunity as always to put you guys on a bit of guidance and let you know where my attention is going to be as we open up these markets Monday morning, so I can get you guys moving in the right lanes given the retreat we've seen in prices over the last week. Now the pullback that we've seen in prices over the last week isn't an opportunity for you guys to start panicking or selling out of your positions. That is an amateur way of thinking. When these market prices drop, the seasoned investors all come out to play because they know that the market gives a lot more than it takes over time, and the market always rewards these fundamentals. So that being said, I want you guys to know that what we've seen over the last week, those price movements, is a lot of noise that we can just capitalize on, get into quality plays at a much cheaper price point. That being said guys, in this one I've got a jam-packed one for you, so let's dive into the first one. So we're going to kick things off here. That's ticker symbol DAC, that's the nails. Now this is our shipping play. This one's come down in line with the rest of the market over the week. I want you guys to know it would have been normal for these growth plays to come down 10-15% over the week that we've just had in these markets, just like this one has. Now to the untrained eye, that pullback you've seen in that stock price might seem like there's a problem with the revenues or the profitability. I want you to know it's far from the case with this one. It's very much the opposite. This play is still firing on all cylinders. Demand to move freight around the world is still at sky high levels, and the price that they're importing at is still a 500%, as I told you guys, what it was last year. Okay, so as I say, from a business perspective, this one is doing better than ever. And I want to let you guys know that earnings are coming up, should be the second week of August, and they will inevitably have a blowout performance. It's an opportunity for you guys to get in on the play, build out your positions ahead of time before they surprise Wall Street, and there's a potential to see that bounce back in that stock price. So this is the first play I'm gonna bring to attention ahead of next week. Now this one's currently standing in the low 60s. I'm expecting them to put at least 30-40% on the upside on this one as we move towards the end of the year. So I want you guys in on one of the biggest shifts we're seeing in any industry in these markets. So make sure that you guys make entry on this play next week in these markets at these types of price levels. Catch them in the low 60s, $62, $61. That's the point where you guys make entry on the play. The next one I've got for that's NUE, that's Nucor. Now this is a still play, and check this one out. This one's down just under 10% on the month, off their all-time highs of just over $110. So another play just like the nails, where it's moving in the opposite direction of that stock price, because these steel prices are hovering around all-time highs, and it's set to continue that way because we're still seeing that demand and those supply constraints which have led to that high price in the first place. So it makes these steel plays hot property. So I'm gonna make sure you guys are in on this play ahead of Monday morning because they are coming out with their earnings. That's the 22nd of July, that's Thursday. So make sure you guys can get entry on this play because I'm expecting an earnings blowout. I'm expecting them to surprise the street and cause an increase in that stock price. So you guys want to be strategic with your entry on this one. So if we continue on Monday, same way we left off on Friday, lower global prices in these stock markets, you guys want to put this one on your watch list, try and catch them as low as possible. Could be $90, could be $89. Now if we have a bounce back on prices, you guys want to show a little bit more urgency and get in on this one, as I say, in the low 90s ahead of Thursday's earnings session. Now the Neos Nucor, it's going to be new plays for some of you guys. The shipping industry, the steel industry, it's not what you guys are going to be used to. It's going to be different from your usual tech EV plays. Now if you guys want to hit success in these markets, you're going to make sure that you're moving in different lanes, okay? The next one I've got for that's ticker symbol M, that's Macy's. Now the great thing about these pullbacks across the board, guys, is it gives you an opportunity to get into great plays that you didn't manage to the first time round because the price was just too high. And this is just another opportunity for you guys to make great returns in these markets. Now there's a lot to like about this play, and I give you guys the details because the pandemic created a lot of opportunities for plays, allowed them to transition their business, and this is one of these plays because on the digital side of things, they just increased their e-commerce platform, increased their market share, added 5 million customers to the business. Now on the brick and mortar side of things, because of the vaccine rollout, economic reopening, that's also performing well, and the tailwinds are still there to continue the strength on that side of the business. Now we got retail sales on Friday, and I gave you guys a heads up on that. It gives us an opportunity to look under the hood in some of these types of plays. So we got department sales up 6% month on month. We got clothing sales up 2% month on month, and we've got online retail sales up 1%. So these are all the lanes that Macy's move in. Yeah, if you look at that stock price, down over 3% on Friday's session and down 10% on the week. Wall Street is just making this too easy for us guys, because this is one behind the scenes is just firing on all cylinders. So I want you guys in on this play next week in these markets, because the trends are just still going to continue the same way, because consumers have that sky high spending power. There's all that pent up demand, and it's all event driven, whether it's back to school spending, whether it's on socials, concerts. Going to see increased numbers for these retail sales as we move through the year, benefiting this play. So we're looking for entry under $17, and there's tons of upside from these types of levels over the next couple of quarters. Our next play, that's ticker symbol CZR, that's Caesars Entertainment. Now this is our channel gaming gambling play that owns that rich portfolio of casinos. Now check this out, this one's under $90, completely oversold at these types of levels. So another gem of an opportunity for you guys to grab next week in these markets. So as I've been saying, this is a phenomenal reopening play that you need to make sure you take full advantage of. Now check this out, Nevada casinos taking record 1.3 billion in winnings in May, smashing through the previous high they set back in October 2007. That's a big deal for the play, because they're positioned in the sweet spot to take full advantage of this. So despite the stock price movement we've seen recently, that dropped down almost 5% on Friday's session, or down over 7% on the week. Under the hood guys, this is a play firing on all cylinders. So when they come to post up their quarterly financial, which we should get the middle of August, you know they're beating street estimates, which should cause that stock price to move up, give it some momentum. So this is a fundamentally sound play. Again, another one that I'm gonna make sure that you guys are taking full advantage of. Alright guys, so those are the plays I've got for this one and the moves we're going to be making with. Now a quick note from me, you would notice that all the plays I've given you in this drop, they're multi-billion dollar plays. Given the pullback we've seen across the global market, it's easy money for us guys to get into plays, quality plays, which have established positions in their relative industries and make great results, whether that's 30, 40, 50% on our money, okay? No need to take additional risk in these types of markets by jumping into plays with very low market caps or very volatile or haven't built up strong positions within their industries, okay? So make sure that you guys are taking a look at these 4 plays I've given you, because they're some of our most highest conviction plays on the channel. Now you've got to remember what the markets are doing right now. They're pushing a lot of these plays into oversold positions, and that's just market movements that we get from time to time. It's an opportunity for us to take full advantage of. Remember, oversold is when prices drop. You see a lot of selling activity pushing these prices below their fair value, and all these plays have dropped on your radar. Fair value is above what they're currently trading at. So if you've been rocking with the channel, you know what time it is. If your main goal is to try and build wealth long term, how many different stocks is reasonable to have in your portfolio? And do you ever sell these stocks and try to move on to something potentially bigger and better, or hold on to those for 10 plus years? So to wrap this up, I'm going to share some of you guys. This is a great question, so I want you locked in on this. Now what I'm seeing out there, particularly from my new investors in the game, is you guys are too quick to get in and out of these positions anytime you hit small bits of turbulence in these markets. So I want you to scrap that. I'm going to give you a framework. So I say typically have 20 to 25 plays in your portfolio, and you want 5 of those plays with a view to hold long term. I'm talking 10 years, okay? It'll make you much better investors. Now some of the best investors in the game, some of the most wealthy investors, they have long-term positions. Take a Warren Buffett, for example. Some of his plays have been holding 25, 30 years plus even, and over time, he's built phenomenal amounts of wealth. So you guys want to have a foundation in your portfolio with those 5 long-term plays. Now for me, a couple of those long-term plays would be an Apple, a Microsoft. So these are plays with multi-billion dollars in market cap, if not trillions, okay? Verging on trillions. They have built their position within their respective industries. They have the cash to continue growing, and they're just safe bets that you just have and just let them run over time. I call them the engines in your portfolio that just work in the background. Now those other plays in your portfolio, those 15 plays, that would be your Grow Generation, your Revolve, your Caesars, for example, and you still want to have a view to hold those at least 6 months to let the returns materialize. But these are plays that you can more actively manage. So you can hold them for whether it's 6, 9, 12 months time, whatever you wish, sell out those plays, pivot into another play. But you still, as I say, have the foundation of your portfolio in your long-term plays, the 5 plays in your portfolio. That's how you guys are going to hit success in these markets. Alright guys, that wraps up for this one. If you've got any questions for me, drop them down below and I get back to you. I'm going to say I appreciate you guys. On your way out, loud that comment section for me. If you're new, join the movement, and I catch you on the next one.